What happens when the next recession comes? Should we stop investing in real estate and wait? Should we keep investing? Should we be more careful? All of these are really good questions. I was investing in real estate before the 2008 and 2009 real estate downturn, and I made a bunch of mistakes, but luckily I also did some things right. And so I have some thoughts about how to think about it going forward, what we should be doing to prepare, and I'm going to give those to you in today's Ask Coach episode, and we're getting started right now. Hi, I'm Chad Carson. As you can see from the t-shirt, you can also call me Coach Carson. This show is all about investing in real estate. It's about achieving financial independence, and it's about, most of all, doing what matters in your life. In just a moment, I'm going to take you to a clip from a recent Ask Coach live stream where someone asked me if I take a looming or a coming recession, whenever it's going to happen, into account in my investing in buy and hold real estate. So the short answer is, of course, yes, I do. But there's some nuance to that. I was investing as a young investor. I began in 2003. And so I really built up and we really got going right about 2007. So it shows you how good I am at predicting it, where we bought a lot of properties. And some of it was good. We made some money on some things. We definitely made some mistakes that set us back for a while. So I want to share with you my experience and how that's influenced what I'm thinking about going forward. Whether you're listening to this when I made the video in 2019 or 10 years from now, there's some common themes because real estate goes up and down. So let's get to my answer. I'll take you there right now. So yes, like the market cycles in real estate are very important. And so, we can't ignore that. And, I think every part of the country is a little bit different on how, even during the recession, certain parts of the country, like where I am in South Carolina, was a couple of years behind California, places like that. Like they got into the housing recession in 2006, 2007. It took us kind of 2008, 2009 to get in there. So, there's some real estate is, even when things change, it's not like the stock market all the time where it's just like, bam, today down 20%, real estate, it takes longer to sell properties and it takes longer to get out of them, but the market also moves a little bit slower. And so that's a benefit for us if you pay attention to what's going on in your market. And so my approach right now is I'm not trying to be super aggressive. I'm not taking chances with extending myself on extra debt. But I'm not opposed to buying income properties either. So I think the key is just to stay very disciplined and assume that you're going to own a property with the current rent level, if they're never appreciated at $1, are you happy owning this property based on the income it produces today, based on the loan that you're borrowing today, and so that you could kind of shut down things for the next 10 to 15 years and be okay with that. If you're okay answering that question and you can buy a property that meets a good criteria, at least basic good criteria for the next 5 to 10 years or 10 to 15 years, then I think it's okay because you can ride out that storm. And I bought way too many properties in 2007. We had 50 closings in 1 year, which was just nuts, just crazy. We were flipping houses, we were buying new rental properties. A lot of those were really good deals though. So some of them were very, a smaller handful, but enough that it made our life kind of negative for a while. Were not good deals, had negative cash flow, were in bad locations. So the mistake we made on those is being a little bit too aggressive, expanding too fast, we got sloppy underestimating our repair costs and things like that. And so that was what the issue was for us, but we had enough cash reserves that we could dip into those. So we were frugal going into it. So that's another thing I would say, Suling. Be disciplined with your underwriting of your deals. Make sure they cash flow for the next 10 years without counting on appreciation. And then have good cash reserves in case things go wrong, in case things change a little bit. You don't want to be living on the edge. And if you do that, then I think you're okay. I think we can't always be out of the market or always be in. I'm more about dollar cost averaging, meaning you're always buying. You'll probably buy fewer properties right now as the market's kind of at a peak. But if you're always buying, you never know when things are going to change. It's really hard to predict. And so you're always looking, you're always buying, and you'll tend to buy more properties during the downturns when everybody else is doesn't have the financing or can't make it happen. But because you're in the market consistently buying, you'll be the one who's still there to make a deal or two once the market dips down. That is my approach. So nothing changes with the fundamentals. I'm still trying to be just make the numbers work. I'm trying to buy a little bit better quality locations too. Like I don't want to be too aggressive on, D kind of properties. I think try to look for quality as well if you can. C+, B- would be more my preference. Thanks for watching this episode of Ask Coach TV. I would love to hear from you in the comments below. What do you think about investing if a recession is on the horizon, either in the short term or in the next year or two? Are you sitting on the sidelines? Are you continuing to invest? And if you are continuing to invest, what are you doing to prepare yourself? What are your criteria, or what are you changing as an investor? This is a good conversation to have because real estate, as we talked about, has cycles, and we have to prepare for those. If you like this video and you'd like to hear more, I hope you'll choose to subscribe. You can click on the subscribe button below in YouTube and be sure to click on that little bell. It'll notify you of all the new videos we have coming forward. If you're in Facebook, just click on like and it'll do the same thing. I've got a lot of questions from you. You have amazing questions, and it's an honor to do my best to answer these, or at least share some insight with you. And this whole channel and this Ask Coach series in particular is all about helping you get better at investing in real estate. It's about helping you move towards financial independence and really helping you do more of what matters in your life. It's an honor to have you here. I appreciate your time. And until next time, my name's Chad Carson. Also go by Coach Carson. I'll see you in the next episode.